Clearly, it has been a tough few years for global trade growth. In 2009, in the aftermath of the global financial crisis, trade suffered its largest decline on record, down 12% in volume terms and 23% in dollar terms compared to previous years. Now, since then, we haven't seen any more declines, and that's good news. But other than the partial rebound in 2010, growth has remained a long way below the historical average. And for the last 2 years, trade growth has been sluggish. So let's have a look at what happened in 2013 and how we did in terms of our forecasts. World trade growth in volume terms in 2013 slowed to just 2.1%. In real volume terms, again, confirming, of course, the scenario that we had outlined of subdued trade growth. For 2014, so 2014, world trade should rise by 4.7%, and this is not yet quite at the historical average, but it is better than last year. It would definitely be a step in the right direction. For 2015, the forecasts are much more uncertain because, of course, they are based on longer-term predictions and assumptions about the evolution of the world economy between now and then, and those are usually less stable. Now, with this caveat in mind, we foresee a 5.3% in world trade in 2015, and this would be in line with the 20-year average. Underlying these numbers is the expectation that trade growth in Asia will continue to outpace other regions, while Europe will continue to lag behind as high unemployment restrains consumer demand for some time to come in Europe.
If you look at the middle of that table where you reflect the numbers for Europe, you can see that in 2012, 2013, the past 2 years, trade growth was contracting in that part of the world. We see that in 2014, that picture is changing. We expect trade expansion of about 3.2% in Europe. Again, this depends on the expected recovery in the whole European market, a recovery in economic activity. We expect much of the expansion to be led by Asia. Now, I think last Friday, the markets were troubled by some recent reports of a reduction in exports and imports in China. To sort of, however, weigh against that set of negative news, we are also seeing much improved trade expansion in Chinese Taipei in India. Chinese Taipei is usually a good bellwether for trade expansion in the Asia region, although, of course, it's too early to tell. At least the improvements we're seeing in those countries are consistent with the improved trade outlook we see for Asia. The Chinese PMI for March was mixed, but again, we need to see the numbers come in for a much longer time frame.
I just wanted to point out that even though we see Asia leading all other geographic regions in terms of export growth and import growth next year, their growth is still pretty modest by historic standards. For instance, Asia's exports are expected to grow 6.9% in 2014, whereas the average over the last 20 years, including the recent slow years, is 8.6.
The first thing that I think is interesting to note is the ratio between trade growth and GDP growth. And the average ratio since the mid-1980s is about 2 to 1, which means 1% GDP growth normally would equal double that number in terms of trade growth. However, in the last 2 years, that ratio was 1 to 1. So 1% GDP growth, 1% trade growth. And although 2 years of roughly equal growth for both trade and GDP is not unprecedented, it is, in fact, quite rare. And whether this constitutes a trend, it is soon to say. We cannot really tell that, but it's clearly something that we have to keep an eye on. The second point of interest is what has been happening in the least developed countries. And this is something that should always be at the forefront of our minds, as those are the most poor countries in terms of in the WTO membership, and we would like to follow their evolution closely. And it is clear that the LDCs have keenly felt the impact of the global slowdown in the last 2 years. Growth in the dollar value of LDC exports was 1% in 2012 and 5% in 2013. And this is well below the 13% average since 2005 and down sharply from the 24% increase that was seen in 2011. Now, conversely, the LDCs may benefit disproportionately from any improvement in the world economy going forward, since a large portion of their exports, and that's nearly 20%, goes to the recovering European Union. In closing, it is clear that trade is going to improve as the world economy also improves, but I know that just waiting for an automatic increase in trade will not be enough for WTO members. We can actively support trade growth by avoiding protectionism in times of uncertainty, and of course by updating the rules and by reaching new trade agreements. We must make every effort to move towards concluding the Doha Development Agenda as soon as possible. We have already made progress in this work, building on the momentum of Bali. Now we are discussing new ideas and new approaches which could help us to get the job done and to do it quickly. What I can say is that those ideas should fit into a process which we expect will lead to the elaboration of the roadmap that we were mandated to finalize by December this year. So at some point in time, all those ideas, all those approaches should converge into a set of proposals, a set of an architecture that will frame this work program that we have to conclude by the end of the year. If we do that, and if we do that in a way which is specific, detailed, I don't see any reason why we should take a long time to conclude the round.